It's some of the things they did not say in terms of outlook in continued deceleration into 2019. They moderated positively subtly their guidance for Q4 in terms of revenue deceleration, and they kind of left the door open to maybe an improving back half in 2019 by some of the comments they did not really endorse in the Q&A. So it's I think kind of sum it all up as better than was feared.
Now, Mike, it's not just Facebook up this morning. Take a look. Netflix having another very nice morning. What was it, up around 7% last time I looked? Amazon also up. Google, Alphabet up. Is this really a Facebook story, like reacting to earnings here on Facebook, or is there something else going on that's adding to some relief over Facebook?
I think in the lead up to Facebook's numbers, these stocks were straight down for a month, right? Yeah. So they were for sale for a very long time. A few things came together. I think there has been this kind of hedge fund liquidation of some of the high growth, high value names, and that kind of got us right up to the precipice of Facebook. I'll be honest with you, I look at Amazon's bounce today after the decline it's had. It's not necessarily that forceful. So I do think that the fact that Facebook got some traction in terms of the stock reaction to pretty good numbers, or at least numbers that reassured some of the worst worries, I do think that's an excuse for, in a very strong seasonal few days, to have a little bit of a pickup in these stocks.
Rob, I want to get your thoughts on something else that came out of the call yesterday regarding Facebook specifically. That ad impression growth from products in the future is going to be from where Facebook doesn't actually make as much money, and that they're going to have to spend more to stay competitive. How is that a good thing for the stock?
Yeah, well, what you're talking about is the transition away from the news feed into Facebook stories. And the news feed is a very robust, well-established, vibrant auction. And there's auction dynamics with a lot of advertiser activity. There's better pricing. When you're transitioning to an environment that doesn't have as much participation, there will be a transition effect. Now, the company's quite confident that that canvas, the stories, is as monetizable, but you do have this building awareness, building participation, building a bid in the marketplace, and that's a familiar transition that we've seen in other online auction-based markets. So it's something that I think investors have familiarity with, and in the long term, Facebook ends up with two different use cases, one in feed, one in stories, both of which are opportunities to serve ads to their users.
Mike, I worry a bit about this move to premium that I see across a bunch of different companies. And I'm going to try to mix the product strategy with the stocks a little bit here. I mean, Apple, we saw come with a $1,000 phone last year and say, well, you thought that was big. We're going to go bigger price-wise this year. We saw them do the same thing with the iPad Pros yesterday. We see Facebook making a move toward premium in terms of how they're focusing their ad product on stories, on Instagram. How much of that is able to happen because we're in good economic times and might sort of wear off for the brands that can't truly sustain it when things inevitably turn down?
I completely get the concern. It does seem as if it's exploiting both these companies' dominance in their area, and they feel like they can extend it and take advantage of it. I would say for the advertising side, it's not clear to me that that's purely a cyclical thing. In other words, we're counting on the fact that companies are spending heavily just because the market share dynamics are such that, social's still getting so much more. In fact, I think the numbers last night for Facebook, one of the reassuring aspects of it was, okay, there was no real noticeable decline in advertising uptake, and there was no real user flight. So really, the stuff that looks less exciting, which is margins, is under Facebook's control, and ad load is under Facebook's control. Oh, well, so I do think longer term it could be an issue.
We had this discussion after the last print.
Yes.
That the pain they're going through is largely self-imposed.
Right.
I mean, the ad market's there.
And
they're not going back to newspapers.
And what was the stock price then?
Oh,
so there you go.
Yeah.
So that's the difference, right? So you started out in the 140s as opposed to the 170s, wherever it was.
Rob, to that point, with the tech names that you cover, I mean, in terms of the corrections we've seen in some of these share prices, are you happy with these valuations here? What would you be buying, if anything?
Well, I think in this environment, you're looking for the most high quality assets first. I mean, there's three ways to look at it. One is the most stable and steady in the FAANG stocks. That would be Google. The highest quality assets, I would say, are Amazon and Netflix. And if you want the one that's closest to trough multiple, then it's Facebook. I tend to look for quality first, and would be more inclined to look at Amazon and Netflix.